Actually recording this session for the very first time. We're going to be embargoing this meeting for at least 24 hours to give subscribers a chance, if they'd like to act on the information that we're going to be collaborating on here, to do so. And then at some point this week, we're going to be sharing this with people in the other room. So we'll see how that goes. I know there's a lot of demand to actually record our Sunday night meetings. So we're just trying this out as an experiment, see how it goes today. Okay, so because we're recording it, I'm going to go through some basic background information real quick. As you guys know, Story Trading is a collaborative research community. We got the free groups, we got the paid groups that can be accessed to events such as tonight and some of the paid WhatsApp research groups. We are building our own app, Story Trading app. So at launch, when we build that new app, it's going to cost about $20 a month to use the collaboration features of that app. And what you guys are paying for, that's going to be the VIP plan. We're going to launch that plan at $99. So whatever price you're paying now, that's going to be locked in for life. And if you're free and you're listening to the recording here, if you upgrade, you'll be locked into that lower price. I think it's going for $30 now. Now, why collaborate? What's the story? So, when I present, I try to touch on these four pillars, the story being a combination of these fundamentals, catalysts, sentiment, and technicals. So we think when you take all of these things into account, the purpose of that is to explain market price action. When people are just looking at technicals alone or fundamentals alone, things don't add up all the time. But if you can collect data from mass market, from people with different mindsets on all of these four topics, that'll help explain price action and help them make better decisions in the market. So before we get started with the diligence I'm going to share tonight, just want to remind everyone, Story Trading, nor any Story Trading staff are certified financial advisors. While we may share our personal opinions on a trade idea, these opinions are not investment advice or for entertainment purposes only, and do not imply or reflect any official endorsement by Story Trading. All right, so now we're going to get to DRIO. Let me unmute Rob Mock. So what I want to share with you, the research I did. Pull it over to the screen here. 1 second. Okay, there we go. So what I set out to do, I did a little project. I went back and I looked at all of the official communications from this company post-COVID, because that's the period of time I was interested in. I wanted to know basically what changed since COVID started, how credible is management, because this last conference call sounded great and there were a lot of exciting things that were said in that. So the first thing I want to know is, does this company have a track record or history of making promises they keep, or do they break those promises? So I went back and I looked at the March 17th Q4 results, started with that. I got 5 pages of notes here. I documented all of the important nuggets from that, including the Q&A. And I went through and every single press release in between the conference calls that were relevant, I documented those and put important nuggets in. And I did the same thing for the next 2 conference calls. Okay, so I have 5 pages of notes here. I went through this previously with Rob. So Rob, feel free to jump in anytime you want to mention something. Rob said he's still on mute. Okay, so I just...
okay, I'm on mute. Thanks.
There you go. So yeah, feel free to jump in anytime. But big picture, before we go into the details, what I found is that at least for the last 3 conference calls, this company has been extremely credible. And when I say that, not only does that mean that they follow through on some teases, that they put in their conference calls, but they also drop nuggets in conference calls that you won't hear anywhere else. So they're basically giving you information ahead of press releases. If you listen to carefully the conference call, and and I observed the price action of the stock in the open market. And even though that information is basically given out ahead of time on the conference calls, most of the market's not aware of it. And when the press releases do hit, it moves the stock anyway. So that's big picture what I found. Now, I don't want any of you to take my word for it. I'm going to make these notes available to our paying subscribers after the call and throughout the week. And I encourage everyone to go in and double check my work and to kind of organize this better. These are just my raw notes. So I'll try, quickly, because there's a lot here. It'll take me a couple hours to go through each line probably, but I'll try quickly to go through what pops out to me here, and then we'll do Q&A. And again, Rob, you can jump in anytime you want. So going to Q4 results. You can kind of read there, 1.8 million revenue, 4.2 million operating results loss. Now, here's the key thing in green here. On the conference call, they said they've already signed a few contracts. When I tell you a few contracts, I'm talking about this shift to B2B2C, right? Because they were direct to consumer. So this shift to B2B2C, they're trying to sign employer health plans and insurance companies. So let me just shut off that sound there. Okay, so this was teased in the conference call, and it's actually highlighted in green because it came true, all right? So we're gonna go down further and see what they meant by that. Now, another important thing on this March 17th call, those of you who have been collaborating in the DRIO research group, you know that I've shared the management slide and of the 3 executives they poached from Cadasys, OnTrack, OTRK. And it turns out when you go look at the management comments historically back on March 17th, management themselves, they viewed the hiring of Rick Anderson as the inflection point for the company. Now, Rick Anderson, if you go look at what he did at Cadasys, he was, I don't know if he was in charge, but he was dealt with bringing on a number of insurance plans onto his customers over at Cadasys. And that's what he was brought in for over here at DRIO, to sign up to insurance companies and employer-based plans. Okay, so that's what I got. That's the first few bullets there, important to know. Just a couple nuggets, 46,000. Most of the stuff highlighted in green, red, and blue, that's probably the most important stuff, but we'll just mention these. There were 46,000 direct-to-consumer customers at that time. The market size they're looking at, now this was pre-COVID, $9 billion in digital therapeutics market. Let me see if I can switch my screen share to go to my other screen. 1 second. Okay, do you guys still see my notes?
Yes.
Okay, I switched to the other screen so I can look directly at the camera now. All right.
Is everyone aware of why COVID is driving demand towards this space? So diabetes is one of the biggest risk factors for death with COVID. And because doctors and nurses and hospitals are being so careful, they actually want to spend less time in front of patients and more time with remote monitoring. And DRIO makes diabetes monitoring remote monitoring, and that's what's driving kind of huge demand towards this space. And the reason the revenues are so small for DRIO is they focused on the consumer market. And like Ben said, they took on some management from OnTrack to move closer to the business to business marketing. And they also had recently a very bullish raise to increase their sales team to help them keep up with Livongo and Cadasys, and build their sales team to get as many customers as possible, as quick as possible.
Thank you, Rob, for that background. So probably some people weren't familiar, so I do appreciate that. So going back to then we got to here. So the things in red are things that they potentially didn't follow up on, right? Because again, I was tracking credibility here. So in the Q4 call, they mentioned something called a launch of membership in a box that launched at Best Buy, Walmart, and Albertson. And since they mentioned that, that was supposed to drive direct-to-consumer subscriptions. They indicated that they were going to continue actually focusing on direct-to-consumer subscriptions with these relationships at the big box retail, even as they were going to B2B2C. And then they never mentioned it again. Now, it may have been just because of COVID and the stores closed, and none of the analysts followed up asking questions about it in the following 2 conference calls. So most people are just focused on the B2B to C, and but I'm just letting you know that, because I like to track that when membership, when management mentions some initiative, but then they stop talking about it in the subsequent conference calls. So I just documented it there. All right. Again, just to track, so I can get the whole point for me out of this whole process is to kind of give a credibility score to management, so I can develop my confidence level of the most recent call. Is it going to come true or not? And the other purpose I should have said up front of why I did this exercise was so I can have a really good understanding of the type of catalysts that will move the stock up and down. So when news hits, I'll know immediately how to react. I'll know if that's to sell the news or buy the news. I'll know, how impactful it might be to the stock price. And, you can really do well at that if you understand all of the moving parts and all the different catalysts that have been happening in the prior 6-9 months. So that's the other reason I did this exercise. All right. So, what else here? Talking about the remote patient monitoring, that they started pursuing that, and they did. Obviously, new Medicare billing codes allotted billing for that in 2020. Now, here's something that they talked about, a nugget which didn't come up again, but maybe it will because it's development stage collaboration. So back in March 17th, they talked about an agreement with Aramai Therapeutics, formerly Dance Biopharma, to integrate a gentle mist smart inhaler for real-time treatment data. They didn't expand on that much, and I didn't research what this Aramai Therapeutics is, but to me, it sounds like in addition to monitoring, they have aspirations to get into treatment, home treatment. That's what it sounds like. And they did talk about the potential to have partnerships like this in the treatment arena with actual products that are already on the market. They said this one is development stage, but there's other, potential new partnerships with actual, products that are out there. Now, back in March 17th, they also talked about that they want to go into other chronic conditions, hypertension, they want to go into pre-diabetes, obesity in 2020. Now, those, it sounds like they are following through on progress with that. So unlike the Aramai Therapeutics, they've continued to talk about that and progress those targets in terms of completing and moving towards that in the subsequent next 2 conference calls. Okay.
I have a few comments. On the membership on a box, I think COVID probably pushed a dramatic demand in the current quarter. They mentioned backing off some of the business to consumer demand and focusing on business to business. So it may not be that they didn't follow through with that. It's just demand got so high for business to business that they had to pull away a bit from the business to consumer market. And I've also followed some companies that make inhaled insulin, and they're all, I guess they're working on the products, but a lot of the companies don't have it finalized yet.
Okay, cool. Thanks. Now going to the Q&A, before they just mentioned COVID. This is very early on, like a week after COVID hit the States or something. Was it March 17th? So no, COVID was getting into full swing at that point. So they did give some comments at the end of the conference call that's saying, hey, we see what's going on with COVID, and we think, here it is. They said they're seeing a lot of requests and urgent RFPs in order to provide the remote patient monitoring services. I said at the time, no inventory, supply chain issues, employees are operating uninterrupted with Zoom and Slack. So going to the Q&A, an analyst said that in the prior quarter, which I didn't document, that the company said they had access to 100,000 to 200,000 diabetics via a B2B channel. And they said, what is that number now? So again, I don't know what the access comes from or what kind of partnership that came from. But what they did say is that there's going to be even, an increase to that via new contracts, above reference contracts I mentioned, in the prepared remarks during the quarter. And they predict big jump in the second half in terms of that number because of the B2B2C. 15 to 20%, I think that's the revenue of the business comes from B2B2C, and the rest comes from the direct to consumer. Someone asked, why did Rick leave Cadisys? And this is important. Rick says it was mostly because of user satisfaction of their app on the consumer side. So this is something really interesting. As I was researching this and going through all the conference calls and doing a little research on the app myself and doing some product checks, it really does seem that the DRIO app is much more user-friendly, and the customers like the DRIO app much, much more than they like the Livongo or Teladoc app. Livongo is the better comparable anyway over here. But so that was very interesting. And that was one of the reasons Rick left Cadasys. The DNA of this company was direct to consumer. So, and it's very obvious to see that when you download the app and go through the onboarding experience. And if you look at the ratings and the number of people who have rated the DRIO app versus the Livongo app, it just blows away Livongo. So that's very interesting because it seems to have a superior product to Livongo. And you know, when you look at why Rick left Cadasys to now develop these B2B channels, it kind of reminded me, for those of you familiar with SMSI, there was this app that we all researched. It was like, what was it? Something 360. Do you remember the name of that?
Life 360.
Life 360. And there was this huge conversation about, hey, Life 360 seemed to be much sleeker, better user experience, much higher ratings, much higher engagement. And people are like, well, why should I invest in SMSI? You know, Life 360 has the better app. And the answer was that SMSI had the sales channels. So even if it was an inferior app, SMSI had built those relationships. They had the back end know-how to integrate with carriers. So what this kind of reminds me of is taking the executives at SMSI and having them go to Life 360 to now sell Life 360 to the carriers. To me, that's the parallel, and that's how I kind of saw this as I learned more about this opportunity. You know, you can kind of read these on your own later on. Again, this is all about the consumer-focused product. At this point, let's see, 46,000 active users. Half of them are on monthly recurring. Half of them, I don't fully understand this, but I guess it's people using the device. So they purchase the device things, but they're not monthly recurring, and you know, they're switching to all monthly recurring eventually. So that was the fourth quarter. Subsequent to the fourth quarter, March 24th, a week later, they announced the Vitality co-marketing deal for self-insured employers. Okay. April 29th, about a month after that, they announced this partnership with MetaOrbis. May 4th, behavioral health. Okay, so they have all of these partnerships, and of course they hired 2 more people from Cadasys. But this one in particular, a week later, Vitality. So to me, that goes back to their promises that they dropped, these nuggets that they're going to announce. They said, we'll announce new contracts in the coming quarter, right? Up here, the green over here, already signed a few contracts, right? A few, right? So they may have already signed this Vitality and MetaOrbis. And what I've gotten, the trend I've learned from listening to how they interact with the investors is that they do not announce contracts when they're signed. They announce contracts when they actually go to launch. And that's similar to, you know, what we see with SMSI. So if you look at these press releases that have happened this whole year since COVID, it actually says every time they mention it, it's basically saying it's available now, starting today. It's launched, you know. So I'm not saying that that's always going to happen, but that seems to be the trend. So they basically know on the conference calls if they've had these contracts signed, but they really can't tell you, right, until it's actually in production launch. So that seems to be why they're able to drop these nuggets on the conference calls.
So you're saying they're only announcing things when they're completely sure and the contract's signed already?
Well, even more, I mean, in this case, in Vitality, it seems like they already had the contracts because they said they will announce contracts in the coming quarter, right?
Makes sense.
So it sounds like the contract was already signed, just not announced. So I think, and that was a week later, so they probably had this in the bag. And as I said, I think it was ready to actually go. I think if you go look at the fine print of this article, I think it said, you know, starting right away, people can sign up through the Vitality sales reps or the Vitality portal.
Makes sense. I think on you mentioned the active device users. One thing DRIO does different than other companies is it monitors how much the consumers are using the device, and it only charges money for the active users. So if a user is in the system but goes inactive, the business or the insurer or the consumer no longer has to pay. And the businesses and the insurers love that because they only want to pay for active users and not have open accounts that aren't being used. And that's a case where DRIO's looking out for the user and the insurer or the business.
Great, thank you. So here's an area I'm not fully knowledgeable about. The difference between kind of what Livongo does with the diabetes management, meaning, DRIO is more like Livongo in that sense versus Teladoc, which is the full service telemedicine offering. So over here, April 29th, they're saying they've partnered with MediOrbis for full service telemedicine offering. So I don't know exactly how that's happening, how that impacts the app user experience, but it seems to me that this announcement has to do with offering more Teladoc type services, whereas without that announcement and everything else they're doing is more the Livongo type of stuff, the chronic management of the disease states, remote patient monitoring, all that. So that's something I don't have a full grasp on. Okay, now May 4th, they added behavioral health for stress, anxiety, loneliness. Now, another thing, this reminds me, this behavioral health, you'll see, throughout these conference calls, one of the things they tout as a difference in their technology. So the two main things is the app user experience and the engagement levels and the stickiness, right? But there's two additional things from that. One is the engagement levels are really high, or they're confident that they're high enough that in terms of how they charge their customers, the employers and the healthcare plans, they only charge them if the end user is highly engaged with the app. I forgot what the number is, but it's, I don't know if it's 12 or 16 or something like that, but there has to be a number of engagements per month in order to actually charge the employer health plan for that. So that's an advantage over other competitors like Livongo, and they're able to do that because their app is so engaging from a user perspective that they have those great stats in terms of engagement. And the other thing which they tout a lot is, which I don't fully understand how it works compared to Livongo, but they talk about how it's an open platform, which allows outside third-party providers to come and offer their services. So I believe, I don't know if it was on May 4th that discussed it or later when they were talking about this announcement, behavioral health, that they have like outside coaches able to do this on their platform, and they basically say that's an advantage of their company over Livongo. Okay, so now we go to Q1 results, May 12th. Revenues, let's see what happened, dropped a little bit. Operating loss was big because mostly due to stock-based compensation though. But gross margins went significantly higher, even though revenue dropped, and that's because of the ongoing shift to the software as a service model. Now, here we go, the blue stuff. A few significant B2BC agreements, some already announced, a few under negotiation, and COVID-19 tailwind pushing them forward. Let's go to the next blue point. Close to entering a significant opportunity in retail space, which would provide significant growth the rest of the year. Haven't heard about that again, actually. But here's your nugget, because this is the word. See, up here, they said under negotiation, things are pushing forward, significant opportunities, but here's your nugget. First two RPM contracts signed. They said it's signed. This is the first time you heard about it, was not mentioned anywhere else, and lo and behold, that was May 12th. What happens? A month later, they announced these two RPM agreements. And if you look at the stock, it jumped like 15, 20% that day. Right? So these guys are like giving everyone like gifts. They're telling you ahead of time what they're going to PR. So that was amazing. They have credibility there. Okay. Now, what else did we see? They gave more details of that Vitality Group deal. Significantly grew the pipeline in Q1. Yada, 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 yada. Now, at this point, we haven't really heard anything about the size of the opportunity and how this might impact revenue in the second half in 2021. We have more nuggets and information about that when we get to the latest conference call. at this point so far, all I'm able to see is that they're credible in terms of the nuggets they drop and the subsequent announcements. So here we go into the Q&A. In the Q&A, there's a good question. Rick, that's the guy from Cadasys, you've been on board for 4 months. What have you learned? And he said, I've learned the platform has been much more flexible than you imagine it could be. They can build what's needed quickly to meet the needs of winning these contracts. And really the only challenge to growing the company is just a matter of getting the name out there. That was from Rick's point of view. He said, what worked well at Cadasys, you want to implement at DRIO. And he said, it's all about understanding the health plan markets and how they function. So that again reminded me about this parallel with SMSI and the carriers, and understanding the carriers and their needs and how they function and how to strike the deals with the carriers. That seems to be the secret to unlocking, turning a small company into a huge company. The whole key is understanding the health plan market and bringing that to DRIO. And it seems Rick did that over at Cadasys, and that's what he's trying to do over here at DRIO. All right, so going back to, here's one that I'm not going to say it's a negative, but just so people are aware, on a couple occasions, I only documented it once, but it was also said in the first conference call, where they said, we raised $20 million in September. We're, well capitalized, and we're good to go until September 2021 in terms of the runway, in terms of cash, right? Now they did that subsequent raise of 30 million, but it was universally seen as a good raise. It wasn't out of desperation. I mean, it gives them a runway of like 3 years now. So they really didn't need to do that deal. They wanted to do that deal to grow faster. So, but I'm just putting it out there that management did make that comment that they're well capitalized and they're good to September 21, and they went ahead and did another raise. So I'm not criticizing them for that. I just want to be fully transparent here.
Did they mention what this raise was for, this 20 million?
Not in these 2 quarters.
Just to keep the business going.
I think so at that point.
Got it.
Mm-hmm. Okay, that Vitality deal, someone asked, is that an exclusive deal? Now I found out, I don't know if I found that out here earlier, but Vitality owns some warrants in, I think it's performance-based warrants or something in DRIO. So they're motivated to make that relationship successful. However, it's not exclusive. They can sell other plans alongside the DRIO plan they're selling. At this point, we're not really hearing about any specific contracts. Later on, we did hear explicitly that they got their first sale, their first employer that signed up through Vitality. So that has happened currently. But at this point in this conference call, it didn't. So when will revenue start hitting? So at this point, they're saying it's going to start ramping up in the second half of 2020, but you're really going to see the impact in 2021. And that's also due to how the employer plans and health plans, a lot of them change plans on January 1st. So they're signing those deals now, but then it'll be available to the customer starting January. So something to be aware of. Okay. So that quarter ended, and as I talked about, there we go. There's a credibility. We got the 2 RPM agreements, June 11th. July 6th, it looks like they had a significant addition to the board of directors from Optima Health. You can go read about that, how large they are. Okay, now here's the big one that caught my attention. July 20th, they enter the UK remote patient monitoring market with Williams Medical. So that caught my eye. DRIO was on my watch list since the beginning of COVID because I was interested in the telehealth space. But I never really got interested until I saw this press release. And I'm not sure why that sparked my interest, but it just did, right? Maybe the title was good or something, but I went into it, I read it, and it sounded great. It sounds like Williams Medical is a leading provider of medical services with access, again, to 8,000 practices and providers. So that's kind of when I got interested. And then you got catalyst after catalyst after catalyst, July 20th through August 5th. Then you had this bullish raise of $28.6 million. And you have this Teladoc Livongo merger a week after that. And then we get into the most recent quarter, okay? August 12th. So now this is the one we want to pay more attention to, all right? So here, revenue is 1.78 million. I believe it was up up slightly from 1.67. Net loss 4 million. Now here, late stage discussions with several large entities. So this is where, because they made a lot of promises / nuggets on this call. So this is where we want to pay careful attention to the language. You guys or individually may want to go back, or if someone wants to volunteer to clean up this document, you're more than welcome to. But I think now, because we understand how they operate, I showed you that when they use the word signed, right, that we have agreement signed, that it's coming, right? It's going to be announced in a couple of weeks. Or they said we will announce, they're going to announce it, right? So that's slightly different language than, late stage discussions. So in this point, at this point, I believe them. They have credibility. When they say late stage discussions, that's what it is. They're in late stage discussions with several large entities, and which they hope to announce in the very near future. So you can make of that what you want. Moving forward, much more significant revenue growth. Q3 and Q4 comfortable. They will sign several contracts which are in the pipeline. Okay. Again, based on the credibility, I tend to believe that between all these comments they're making. 38 million cash, no debt, runway of a few years. They're tripling the size of their US sales team. I think I have something lower down about use of funds, but if my memory serves me correct, their number one priority with use of funds is closing on the current pipeline. Number two priority is widening the funnel, getting more opportunities into that sales funnel. And then the third lowest priority use of funds is the technology, mostly to support additional chronic disease states. So anticipate further telehealth partnerships in the coming quarter. They talked about how they won business over Livongo and Omada. I don't know who Omada is, but they won business over Livongo. And again, they think they did that because of their pricing, the way it's structured, and because of the user experience that the customers really like. Vitality platform, here we go. They got their first win from that platform finally. So it took several months to do that. Now, some of the recent wins will launch in the second half of 2020 and others start in January 2021. So this is consistent with what they said in the previous quarter about how revenue will ramp up. Here's an important one. Large employer, there is in the late stage contracting, right? Implementation has already started for launch later this year. I found that very interesting. So late stage contracting, and they've already started implementing for the launch in the second half of the year. So again, based on their credibility, you can make your own judgments of what you think might be coming or not. Now, they talked about the sales cycles, and they're saying normally it's a 12 to 18 month sales cycle, but it's been a little bit quicker because of COVID. Now, here we go. Late stage discussions with a large health plan is now in late stage contracting. So there's two big different things here, a large employer and a large health plan, also in late stage, and implementation again has already begun. So now we have two separate deals, one with an employer, one with a health plan, where it's late stage contracting and implementation has already begun. Additional entities in late stage discussions or contracting, setting up for additional launches in late 2020, early 2021. Now they're giving you some guidance. They expect moderate sequential revenue growth through the second half of 2020. They said the analyst estimates of 10 to 12 million revenue in 2021 is based on things at the moment, and it's conservative. So as they bring on these additional contracts, they believe these will be increased. Now, here's one that I interpret as additional to these two contracts that they mentioned here, but I know, Rob, you interpret it maybe not. They're saying they believe they will announce a large transformation, not multiple, because there was a Q&A. They asked how many, is it one or multiple? And they said multiple. So believe they will announce large transformational deals with health plans and other institutions in Q3 and Q4. So is it this employer deal that's transformational? Is it this health plan deal that's transformational? I don't know. One deal here, one deal there doesn't sound transformational to me. I think it might be something bigger.
I think listening to the call, it sounded like it was the same two deals, but they're both transformational deals. And then they say the normal sales cycle is 12 to 18 months. I think because of COVID and to save lives, that's if they're implementing before the contracts are even signed, that means the contracts most likely will be signed, and it's going to push the sales cycle to be much, much smaller. But it doesn't mean more contracts can't come in on top of those two deals. It just means they're going to lock in two large transformational deals, and others may come in right after that.
Okay. Appreciate that perspective there. So Q&A, by the way, after we finish this, we're going to open it up for discussion, and just so everyone's comfortable discussing, we're actually going to end the recording at that point as well. So key nuggets from Q&A. Upcoming announcements, how large are these? And the answer was they're small to jumbo size employers. There's one jumbo size employer in late stage contracting. That's the one that's probably mentioned up there in the northeast. The health plans are all regional players rather than national, something to be aware of. And a couple transformational deals expected to be signed this year. Okay, I don't know. I'll have to go listen to it again. Maybe I'm just being too optimistic. I'm expecting, to me, it sounds like two that are basically almost ready to be announced because it's late stage contracting and already implementation is happening. Whereas these other transformational deals, I think, are further along in the pipeline. It's going to take some time. Okay, remote patient monitoring to be the smaller revenue contributor compared to employer plans and health plans. 3-year contract lengths. I talked about use of funds. All right, now there were a lot of questions. The analysts, they're trying to figure out how to model out revenue in mostly 2021, right? So I don't know where this comment came from. I forgot if it was an analyst saying it or the company, but 200 million is the annual opportunity in the pipeline. Okay, and they expect to close at least 20% of that. So I don't know how to interpret this. If they close 20% of that, so then 40 million is the annual opportunity, right? But is that when they say that, does that mean they're expecting to ramp up based on those 20% deals they close to 40 million revenue? Or is that like the total addressable market that's available to them, right? So for them, the total addressable market through the deals they have would be 40 million. And then obviously they'll only get a percentage of those customers paying. So I don't know the exact answer to that. In terms of implementation, it takes 30 to 90 days to implement after signing a deal. 2 customers are finalizing agreements already being implemented. We talked about that. That's a repetition. For those of you who are monitoring the paying customers, at this point, it's 55,000 paying users or customers, 40 to 45% are monthly recurring. We talked about how they're beating Livongo because of their pricing, and also here they mentioned the coaching open platform and how the UX is better for the customers. After going live with a deal, it takes 3 to 6 months for penetration. So I guess let's say the annual opportunity, they close on 40 million as their TAM. So then it'll take 3 to 6 months to penetrate into that total addressable market.
And I think Florian added where the 200 million came from in the chat.
Oh, sure. What did you say?
He found it.
I say efforts to build name recognition with health plans, employers, and benefits consultants has paid off with opportunities to participate in several requests for proposals or RFPs as a transcript, I guess. And the growth of our sales pipeline to over 200 million in potential revenue across the 3 B2B channels. 200 million we're looking at is an annual basis, so that would be the annual opportunity. Okay. All right. Let's see what we got here. Now, this is something to be aware of. Now that you guys know what's going on, this is an advantage, I think, that we're going to have potentially for people who like to trade around the core or take some kind of risk doing the trade around the core stuff. It's saying here that expenses will go up, at least in the next couple quarters, and losses will increase because of that increased sales effort. They're saying there's a 1 to 2 quarter lag to get that revenue to make up for the increased expenses. So I think there's a couple things. I think the retail market, because they see these big headlines and these big deals, the UK deal, Williams Medical, and the big raise they did. The average trader out there, they don't understand how long thing takes. They're going to be expecting like huge revenue in Q3 and Q4, whereas the real revenue boost is going to be Q1. But then on top of that, there's going to be increased expenses and a bigger loss here in Q3 and maybe even Q4. So the reported numbers, the revenue and the bottom line numbers in the next couple of quarters may disappoint a lot of people. And that could be trading opportunities. So I don't know, you guys can all decide how you want to take advantage of that if you want to. Okay. 8 to 12 quarters to get to, so the goal is 70% gross margins. They've been consistent about this. Actually, they said this way back a couple quarters ago that I forgot to document that, but they've been having this plan of getting to 70% gross margins in 2 to 3 years. To achieve that, they need to get to 80 to 90% business from health plans. So this is something we can monitor qualitatively before the actual numbers come in. We want to see deals and deal flow that shows they're signing up to health plans. That'll show that they're on target, at least on a conceptual level, on a macro level, to be able to increase those gross margins. That's the key to meeting their financial goals here. Monthly ARPU, by switching to the B2B2C, will increase from 25 a month to somewhere in the $60 to $80 range per month, and acquisition costs will decrease from $100 to $30. So obviously that's all very good metrics for business. Talked about the sales cycles. We talked about that 12 to 18 month sales cycle. That was more for the employers, I believe. But for health plans, the sales cycle is typically 1 to 2 years and up to 5 years. But they're actually going to close. They expect to close 2, I think they said, health plans this year, which will end up being a 6 to 9 month sales cycle. And they didn't want to promise that that's going to be like that going forward. They said they don't anticipate that to be the norm. So you get these 2 quick wins here this year for health plans that'll be announced in the second half. And then, we'll see what happens after that. At least they don't want to overpromise possibly. Roadmap going forward is all about more chronic conditions, support for more devices. That's a roadmap for the technology. Okay, now again, going back to the guidance for 2021, the 10 to 12 million is the analyst guidance based on, he said that's very conservative. Now, here we go. More nuggets. Pay attention in the next few weeks and months. Now, earlier on, they said in the next couple weeks or next few weeks, something will be announced, it sounded like. Where was that? Somewhere up there. I'm pretty sure I mentioned that. Or, well, hope to announce in the very near future. I think he did mention the word weeks in there if you go read the transcript.
So there was a couple of weeks mentioned in one of the sentences.
Yeah, it was a couple of weeks. So now again, in the closing remarks, is talking about the few weeks and months, and he predicts very high revenue growth acceleration when these contracts are signed or announced. And once they get these contracts, they're going to be in a position to actually provide their own revenue guidance. So this 10 to 12 million is coming from analysts, apparently. They can provide their own guidance for 2021 later this year. So it seems to me they have very high confidence that they're going to be having lots of great announcements for us, both with employers and health plans in the second half of the year, which is going to dramatically increase this 10 to 12 million revenue projection for 2021. So that's all I got. Before we open it up, I'll unmute everyone for an open discussion. Rob, I want to turn over to you for any comments you have, and then we'll end the recording and go into our open discussion.
So one of the things I wanted to touch on is that last raise, was it about 30 million then?
Yeah, 28.4.
28.4 million. So the last raise had no warrants, which is bullish. And then the raise is one of the things Ben and I discussed, is we believe it's because of
0.6.
like Livongo and OnTrack are probably killing it in customer wins and getting a lot of businesses on board and insurers. And this is DRIO's chance with a very good product that was tested with the consumer to catch up. So they were able to raise all that money with no warrants, and specifically the 1 and 2 points were to completely focus on sales, and to raise that amount of money, which was it like what the market cap of the company was at the time, or close to it, just to
yeah, it was
just to add to the sales team means there's going to be a massive sales ramp up, and that's what's going to lead to the acceleration of revenue. And with all the time, like a lot of these timelines for insurers and businesses and other people to sign up for a service like this, it's usually really slow when it comes to healthcare. Because of COVID, it's been accelerated. And that's one thing to remember. And the other thing is with COVID, there's certain products that are very high demand right now, but after COVID is gone, there may be no demand for them. This product is unique where there's high demand during COVID, and after COVID, it could still be used. So insurers and businesses don't see this as a waste of time because it'll help people manage their diabetes and reduce costs for insurers and reduce costs for businesses.
Great, thank you, Rob. So one last thing before we go to our open discussion for the benefit of those who are not live right now. We do these frequent Zoom events right now. It's typically 2 a week. Tonight's the first time we did like a special additional event. We may have more of that going forward. We have our happy hour Zoom events every Wednesday after the market close, and we have our weekly meetups every Sunday night at 9 p.m., which includes not only a presentation, but a trade of the week competition, which has proven to be very profitable for a lot of people. We're doing really well with that. This weekend, we've already booked our show. It's going to be Dan Carlson from Tailwinds Research presenting INMB, and he's had a great track record. He recently presented TFFP, and the stock like exploded a couple days after he presented. So that's our lineup. Go to storytrading.com to learn more and sign up. Okay, let me end that recording.